Now, the RSI, this is honestly probably my favorite indicator to use. It just has so many different uses. It's incredibly accurate. And beyond that, it is extremely useful on all different time frames for different strategies and just identifying entries, exits, and even when a reversal is likely to occur. So let's explain the RSI. Let's start off with the pure basics. RSI stands for the Relative Strength Index. And basically what this index is going to show you is it's going to show you how the current price is and how it fares in its current strength versus the previous candlesticks and where it was at previously. So what that means is if we take a look at the RSI indicator, you'll notice that we actually get a nice little purple fluctuating line that has a lower bound of a level of 30 marked by this dotted line down here and an upper bound of a level of 70. And about 90% of all the movements in the RSI will fall between these two levels. When we're seeing that the RSI is between the level of 30 and 70, we would consider those to be kind of healthy conditions in the market, and the market is moving normally. However, when the RSI falls above a level of 70 or below a level of 30, that represents that the market has entered into extreme conditions. Now, what exactly are those extreme conditions? Well, when the RSI is beneath a level of 30, kind of like what we're seeing over here, that means that we have entered oversold regions where more sellers have sold the stock than should have, and we can just expect a reversal to occur pretty soon. Now, likewise for the same, when the RSI falls above a level of 70, kind of like what we're seeing over here, this represents that the RSI has reached extreme conditions in the market to the top side, and these would be known as overbought conditions. Now, when the RSI starts reaching these overbought conditions, it's likely that we're going to see a reversal of some sort pretty immediately. On the face of it, a lot of people just think that the RSI has only these two values where if it's below it, it's seen as a buy opportunity since there's likely to see a reversal. And when it's above it, it's likely to reverse back to the downside of some sort and pull back. So that would be a sell opportunity. However, there is so much more to it. Of course, this works on all different time frames. Like say if I go to the 5-minute chart over here, you'll notice that we're seeing those oversold conditions this morning. Perfect buying opportunity, and then we see a nice move upward. Likewise, over here, if we see something like where we're seeing these overbought opportunities, that means that it's likely to see a move occur to the downside, and you can enter a short position there, and that will be it. But there's also the factor that goes into where are these overbought and oversold conditions occurring at. So like say if I were to go ahead and just mark out some levels of support, and we can do that using the two-touch rule. Like say if we identify this level of support down here, and then we make it into a region that pretty much captures everything that's occurring there. We could use a rectangle to do this, and we can kind of mark out a nice little region like this. And this would be kind of like thought of as a demand area or a level of support. Now, the beautiful thing about the RSI is that it is most effective when we are approaching or the price is on top of a level of support. Notice that it's on top of a level of support here, and we're seeing that the RSI is showing those oversold conditions. So this would be a fantastic buying opportunity to go long, allowing you to capitalize on this move that we're seeing right here. And this one just so happened to be in tandem with a gap fill. So this setup altogether would have been very strong to enter call positions. And that's likely what the top traders saw this morning when they entered those positions to the upside. On the other hand, if we say go back over here, mark out levels of resistance, kind of like what we're seeing here, do the same thing, make it into a boxed region where it can be seen as a level of supply this time. If we're seeing those overbought conditions this time, kind of like what we're seeing here, at these specific regions, that would be a very strong opportunity to go short and enter a short position play. Of course, you're going to get some overbought conditions like we're seeing here and here, where you don't really get so much of a pullback to occur. That's why it's pretty imperative to look for if we're at a key level, kind of like what we were seeing right here. If we notice over here, this was not really a key level. It was kind of in the middle of a gap. And that's why this overbought condition was not really a sell signal, since there was still a lot of room for it to move to the upside. However, when we saw that overbought condition over here, where it was on this key level, where there was a lot of resistance, it actually ended up reversing right to the downside and allowing you to capitalize on a huge gain. Key levels are where there are a lot of previous touches of resistance in the past, and where we're not in the midst of what would be like a gap fill like this. Like if you look over here, this level of resistance was previous level of support over here, and after touching this level of support over here, and even if we extend this all the way over far left over here, you'll see that it was a level of support, level of resistance over here, rejected hard off of it, broke back above, turned into a level of support, bounced to the upside, then rejected back through it. And when it finally breached above this level for the second time, we saw a strong move occur off of it. Typically, if you see a lot of strong moves that are occurring off of a singular level, like notice that we're seeing a spike right here and a spike right here. Same with this right here, we see a very strong move that's occurring to the upside right here. This would be considered more of a strong level. Notice same thing over here. When we broke through this level, came down and touched it for a second time, it bounced back extremely hard. So the harder it rejects off of a singular level, the stronger that level is actually likely to be. Whereas if we say mark this level right here, where we saw this overbought condition, this one was in the midst of a gap where there's not a lot of price action to really use in the history of the past couple of days to identify it as a true key level. So this would kind of be invalidated by that. And although it was showing those overbought conditions, the overbought conditions just mean that it is unsustainable for the stock to continue rising immediately, and it's actually unsustainable for it to keep increasing at the current rate that it's at. So it either has to A, pull back, kind of like something that we saw over here, or B, consolidate before making a further move. And this time it chose to consolidate as it wasn't as at a key level. But when it did reach that key level, we see a strong rejection and a pullback occur. Notice the same thing over here. If we look at where this level was, this is kind of in the midst of a consolidation period over here, not exactly a key level. And with that being said, what ended up happening was a little bit more consolidation before we reached that key level and the rejection truly occurred.